You talked about, U.S. treasuries are just the beginning for tokenization. Would love to hear your thoughts on what are the next kind of low-hanging fruit for tokenized assets that you're seeing?
Yeah, I think what I'm seeing is there's one wave of private credit is happening. So for players like Maple or even Upshift, and these players are bringing like institutional borrowers, and they decide the fixed borrow rate, right? And end of the day, even borrow USDC at a fixed rate. So private credit kind of underwriting that started to happen, and then the other immediate category is like where people are excited about stocks on chain, what they can do in DeFi if you can do some lending borrowing with couple of these stocks. So I'm very very excited about that.
All right, here we are with Tarun Gupta, the founder and CEO of Coinshift. Tarun, welcome to Defiant. It's great to have you.
Thanks for having me. It's a pleasure to be here.
So Coinshift has built a really strong business around treasury management for on-chain funds. I know that you have some of the most prominent companies in Web3 as your clients, and that you are rolling out a more kind of crypto native side to your operation. So really excited to learn more, but would love to just start from the very basics. If you can outline your background and what led you to starting Coinshift.
Yeah, for sure. So I got into the space around 2017 as more of like helping some of the Indian exchanges to really run their Bitcoin RPC nodes as a backend infrastructure engineer. So I was running like a consulting business for other startups to build on crypto. And and one of the friend was working in Google. He left Google and started his own exchange. So I was just helping him out. And then I read the Bitcoin white paper, got very, very excited like any other engineer. And I decided to shut down that company and just started working in Bitcoin. And around 2018, Bitcoin Lightning Network was the main thing in terms of scaling Bitcoin. So developed some library to help Lightning developers to build on top of it Lightning apps basically. And then fast forward to sort of 2019, we like I was building the social key recovery protocol. So one of my friend was working with Gnosis, very early team, and we both decided, okay, what is the main problem around 2019? And a lot of people were losing their mnemonic phrases, and we decided to build a social key recovery protocol with Shamir secret sharing, and it was two ahead of the market, I would say. At that time, I think Argent was just getting started, and Casa Hodel, if you know. So, so yeah, I think the bear market just kicked in, and nobody was interested in funding a multi-chain key recovery project. We were pitching like multi-chain at that time. It was too ahead of the market, in short. And then I open sourced that project, and that's how I got connected with Aniket, the founder of Bioeconomy, which is like more of a gasless infrastructure and then helps in the UX side. So I decided to sort of join as sort of their first engineer, build like the entire infrastructure there in Bioeconomy. And actually, all the story is like super connected because we used to get paid in crypto in 2020 in Bioeconomy. And every single month, there was like a big mess to pay to multiple people through your Gnosis safe multi-sig treasury, right? And then, you are waiting for the signers to approve. And there are like N transactions you are doing for paying to N people. And this was very complicated. So I decided to participate in a hackathon in ETH Global. And from there, won Bene and in consensus, like they just loved the project. And we got like a pre-seed round. So the story started around like 2021. We launched our first version of Coinshift, which is more of a treasury management solution. You can come up with your multisig and your signers, and then you are able to do mass payout directly from a multisig and tag the transaction and do some basic financial reporting. So that was like a very simple idea. And very immediately, we were able to serve like all major DAOs and grants programs, including Balancer, Uniswap, and a couple of others. And so far, like we are almost 3+ years old now, and we are over like 1 billion plus AUM actively managed through Coinshift on Gnosis Safe. We don't have our own custody solution, but we are an alternative backend engine to Gnosis Safe, you can say. And there's like almost 1.2 billion in payouts from Aave, Gitcoin, Zapper, UMA, Startnet, and like really major ones. So yeah, I think in last year we launched stablecoin, which we can dig deep into that, but that is like the story so far.
Very cool. What you've built is really useful. I know firsthand from having to do crypto payments for the Defiant from our safe. It really is a pain to have all those like confirmations from the different signers. So yeah, it's great to have this more kind of enterprise solution to crypto payments. Wondering what the business model or fee model is here, if you don't mind sharing.
Yeah. So that was like the biggest struggle. Charging payments with Safe is like, very, very difficult. And in our 2 years of journey, we decided like we will not charge on the payments, and some of our competitors decided to charge, and most of them are like almost like shut down. And it's very risky because at the same time, if you think from a customer perspective, Safe UI is almost free, right? So what you can charge end of the day, it's more of a subscription rather than like a percentage fee on the payouts, because these payouts are very large, right? And then we decided like, okay, let's run the numbers. The TAM of this market, specifically B2B on-chain treasuries, is not very high in terms of number of organizations doing crypto payouts as compared to fiat payouts, versus the treasury size is very big, right? So I think we were like very clear we'll not make money much out of this business, but it's like a customer relationship and highest amount of retention, you can say. So it's an acquisition channel for us. And then when we were raising seed round, we were actually pitching risk management and asset management in terms of treasury management to Sequoia at that time around 2021. So yeah, I think it was very clear we'll make money when our customers will make money. And that's how we get into asset management last year, which is like launching of our own stable coin. So we are not making money through our B2B from payments and sort of bookkeeping. It's for free and it'll be for free. We just want to utilize it as a acquisition channel.
Yeah, super interesting. It makes a lot of sense and makes you competitive and opens the door, like you said, for this additional business line of asset management. And you mentioned your new stablecoin. So I'd love to hear more about this. It's csUSDL?
Yes. So yeah, so the idea was last Feb, we were thinking about a business model which should have like, a really big market and then a growing market, right? And at the same time, our user base is also connected to that so that we can utilize a very unique position, right? And that's how we got connected with Paxos, Steakhouse Financials, and Morpho last year. And I would love to like give you now a detailed overview like how csUSDL works.
Yeah.
But in a definition wise, csUSDL as a yield bearing stablecoin backed by sort of T-bills and Coinbase BTC and Lido's ST and what we decided to do. So there are like more than 53 stablecoins right now, right? According to rw.xyz website. And most of them requires the end user to really lock or stake to get the yield from the sort of protocol, right? And the bigger ones, USDC, USDT, as we all know now in this space of industry, they don't distribute the yield. And the other stablecoins require user staking, etc. Right? So the idea was, okay, can we just distribute the yield without locking or staking on a base layer? And there were like two stable coins which were doing this. One was like Paxos USDL, and the second is USDM by Mountain Protocol. And we were in touch with Paxos, and we decided to, become like a distributor of USDL. So what is USDL is basically a yield bearing stable coin which distributes a T-bill interest rate on blockchain almost on a daily basis. So your USDL grows in balance every single day. It's like a rebasing mechanism. And they work with the government, and it is fully regulated by Abu Dhabi FSRA, and it is fully supervised with the government here, right? So it was very interesting for us to really build on top of this USDL. And then they have a very interesting distributor model as well. So they take like management fees and they distribute the interest rate to the user. And out of that management fees, they give that to a distributor like Coinshift. So the business model was also clear and the TAM was also very, very clear. And for user, it's also a benefit because the risk profile is almost same as USDC, right? If you see. So then we decided, okay, can we take this USDL and put it into a lending protocol like Morpho, because Morpho lets you create permissionless markets. And on top of it, you can create like a Morpho vaults. So then we decided, okay, let's take this USDL and work with Steakhouse Financial, which is like one of the largest curator in Morpho protocol. And they are lending this USDL to CBBTC holders and ST ETH holders. So by just holding csUSDL, you are getting the T-bill yield almost on a daily basis, and then you get the lending yield from CBBTC and STE. So it has like MakerDAO kind of properties as well, and it has USDC properties as well without additional lockup. So that is like our first step of working together with all these players, and then we decided we will make this asset a very liquid asset in the market, and and today csUSDL is like a vault receipt token end of the day from Morpho Watch. And what you can do with that is you can pledge it as a collateral, and you can borrow up to 96.5% LTV. So almost, you can keep earning the yield for 100% of the money. And at the same time, you can borrow against that. And today it's at like 34 million plus. We just launched around like 7th of Jan. So that's a very liquid asset, and we have like a good curve pool and balancer pool. So that our idea is like, can we make like the most liquid asset and the highest competitive yield with the lowest risk possible? Yeah.
Sounds super interesting. And so right now, the treasury yield, which comes from USDL, which is managed by Paxos, plus the yield that comes from using USDL as collateral on Morpho. What's the annualized APY that csUSDL is giving right now?
So right now, including base yield plus lending yield, because the market is down, and the Morpho rewards, because it's a Morpho vault by default. So it is at 5.02% right now. Yeah. On an average, we were yielding like 7 to 8% in a, yeah.
And again, that is reflected in your holding of csUSDL without having to stake it.
Nothing. Yeah, its price will increase. So it's an accumulating token. So csUSDL price will increase, always greater than USD. So you can say it will be like 1.01, 1.02, like it's like increasing like this.
So if like the price of csUSDL, I guess like it does retain its peg. It's just like when you're holding it in your wallet, you have a bigger quantity of the token, but it's still a 1-to-1 stablecoin.
Okay. So csUSDL is not a rebasing token. USDL is a rebasing token. So the way it works is USDL stays to $1 all the time, and it increases in supply, right? But you can't use USDL directly in DeFi, especially in lending protocols. So you need a wrapped version of that. So what we're using is like a wrapped USDL, which just accrues the interest rate greater than USDL price, which is greater than $1 all the time, right? So that's how WUSDL is maintaining the peg. And csUSDL is just a vault receipt token, because you deposit WUSDL to the vault. So csUSDL is always pegged to WUSDL, you can say. So that's how it is maintaining the peg. And then it's Morpho lending protocol as well, which is pretty secure right now. And Steakhouse manages the entire lending part.
With these multiple kind of DeFi Legos that you're using, you're increasing yield, but it also increases risk, right? And added to the fact that you are allowing for under collateralized lending with it, roughly. I mean, I know it's like you said, slightly below 100% LTV. So how do you manage those different layers of risk?
No, I think I would love to like clarify this part. So csUSDL has like WUSDL under the hood. It is fully collateralized by that. And then there is an over collateralized lending through Morpho protocol. So whenever, let's say, you are borrowing from csUSDL vault, so the way it works is you come up with your CBBTC and you borrow WUSDL from us. That's how the lending yield is coming. And that LTV is 86.5%. So it's an over collateralized lending, very similar to Aave and other lending protocols. So there is nothing like under collateralized anywhere. What I was mentioning about 96.5% LLTV is you can take csUSDL as a collateral to borrow USDC again, basically. So that is like a separate construct, and the underlying lending part is a separate construct. So we're not doing any under collateralized lending. It's fully over collateralized using Morpho.
Perfect. I think the underlying thesis of this is a growing demand for tokenized products, specifically in this case, tokenized US treasuries. So would love to hear more about your view on this market.
Yeah, I think first of all, like, numbers speak more than anything, right? Obviously, the numbers are still not very big as it should be. But after, I think, getting the regulation right for stable coins and all these instruments, I think we'll find it ways to actually get regulated. So right now, the way I see the market is we have solved the money use case by putting dollars on blockchain like USDC, USDT, and a couple of others like even DAI, right? But when it comes to the yield use case, the the least risky asset is like T-bills, short-term treasuries like overnight treasuries, right? So they deserve to be on chain. There is no way it should not get on chain, and especially like
Mm.
outside US. For some countries, it's a very big thing. First, you are getting like a US dollar exposure, and then you're getting like a risk-free rate because Fed can always buy out T-bills, right? So you're
Uh-huh.
almost loaning out to government in a sense,
Mm-hmm.
right? So this is like a risk-free rate the entire world should have access to, in my opinion. Like that should be the way. And that's why we are seeing like, all institutional players, and like, like players like Ondo, Budel, and couple of others, right? They are almost like 4 billion plus right now in tokenized treasuries. But that number is very small, in my opinion. That will go in
Mm.
like hundreds of billions or eventually trillions, because everyone will have access to it. Everyone will have it as a collateral to back their reserves, right? So yeah, I think T-bills should flow in DeFi in short.
Mm.
And this is where like Coinshift csUSDL mission as well, right? csUSDL should be deeply integrated in DeFi with all the protocols, you know, and and that's how the T-bills should come on chain. So yeah, I think I'm pretty excited. Not only for T-bills, it's like the lowest risk side. Then you have like a couple of other treasury instruments, right? You can bring on chain, but this should be the minimum everyone deserves. So how I see this is, let's say a Coinshift business right now has almost 200 million plus of idle stablecoins in USDC. And there is no reason they should not be earning the yield, right? What USDC is earning under the hood. It's the
Mm.
same risk, basically. And it's Paxos, right? They work with like all the major ones, and they're the most regulated one. And they're the third stablecoin, largest stablecoin issue. So yeah, I
Mm.
think the vision is very simple actually, like to bring the stables to everyone. And
Mm.
they don't need to go through the KYC and KYB. The compliance is embedded at Paxos layer, and it's all permissionless, just like USDC. So that was our another vision. Like, can you just go to CowSwap and mint csUSDL? You don't need to understand Morpho, Paxos, and all. So you go to CowSwap today, you just type USDC and csUSDL. You'll just swap it down, and it combines on-chain, off-chain liquidity through a solver network. So it's a very
Mm.
beautiful way we embedded this entire T-bills on-chain. Yeah, I don't
Awesome.
think like anyone else has done it so far for T-bills.
Awesome. And so with your view that an increasing amount or a growing market of T-bills will be tokenized on chain, that will increase liquidity. So with your expertise in managing treasuries for institutions, how will that change, having more tokenized assets, how will that change the treasury management business? I guess like you alluded to it by saying, like, first thing, obviously, non-yield bearing stablecoins should be yield bearing, but yeah, if you can expand on that.
Yes, yes. So the way I divide this is like money use case versus yield use case.
Mm.
So when you want to solve money use case, you cannot become illiquid. And think about a scenario when, let's say, I always love this example. So when internet was happening, let's say, and there are a lot of cash available, let's say, right? Then there was a time frame when cash was converted to internet money, right? There was like a duration for that. Not 100% of your money you will convert to internet money on day one, right? And that's why you need like bridges to go in and out.
Mm.
So at that time, like a lot of these fintechs and all did that, or banks did that. Sorry. And I see like USDC is doing the same, right? They are helping you get in and out from dollars directly with USDC. So their main business is that. That's why they are most liquid. They're optimizing on the most liquid side, because once you start seeing I can move out 2 billion in and out very fast, right? You might not move out, right? You just
Mm.
want to stay on chain because and USDC clearly shows in their transparency report or in the transparency page how many people are moving, how much of the USDCs move out, like in terms of redeemability. Majority of stablecoins don't show it, right? So it's very intentional for institutions to see that. So that use case I always see is like more liquid, less yield, right? And that is a different use case. And I think USDC is almost winning, USDP is almost winning there. Then there is a yield use case. And in the yield use case, there will be different risk profiles, right? So T-bills will be on the lowest risk side, where just is a similar risk as USDC. And then there will be more instruments like corporate bonds or AA negative, like more kind of credit ratings you can bring on chain, right? For example, private credit is just like invoice discounting, and all these instruments totally fall under a different risk profile. So the vision is, or the future should be like, this risk aggregated profiles will exist, and all these institutions are smart enough to diversify, right? So the lowest the risk is, the highest they will put money in. And some of our institutional users are actually evaluate all these liquid funds who use csUSDL today. They just evaluate the risk like this only, right? If it is T-bill only and there is a lending risk, then they evaluate is in a very conservative risk strategy, right? Versus delta neutral strategy by a hedge fund or something like Athena. The risk profile is same. Whether right or wrong, I'm not saying that, it's just the risk profile is same, right? And based on that, institutions will diversify. And yeah, I think this is where the distributors like us or other fintechs will come, and they will distribute all these like instruments class, right, to the end user. So end user can choose the risk profile, or maybe they will just be going through some apps where you can choose the risk profile, and based on that you want to see like what is the underlying collateral, and you want to just use that. So yeah, everything will be risk separated in my opinion in the future.
That makes a lot of sense. And so to clarify, you are with csUSDL, you're optimizing for obviously the yield use case. You see that most holders will be holding this token for yield, not necessarily for payments, right?
Not at all. Not at all. Yes.
Right.
Yes.
Okay. And so how much of a corporate treasury do you think should be in csUSDL?
Yes, I think this is a very great question. So I think what is super important for getting businesses into csUSDL, the vault size, overall the TVL size should increase so that they get comfortable to accept, right? Just like the redeemability. So that's why our first job is to get to at least $100 million in TVL, so that all these strategies, if they are diversifying, some part of their stables, right? On an average, each treasury has like $10 to $15 million of stables. There are some crazy ones who has like 100 million plus in stables. So I think the way I see this is like how Brex works. So what Brex is like an on-chain neobank in US, right? So the way they do in fiat world is they say, okay, 80-20, 80% of your treasury should be earning the T-bill rate all the time, and 20% is available to have the cash flow, right? You can run your payroll, expense management, and you can change these percentages based on that. But there is no reason you should not be buying the T-bill, right? That doesn't make any sense for the business, as long as the risk is very, very clear. So yeah, I think 80-20, I would love to replicate the same idea for Coinshift as well.
Okay, so 80-20-20 for payments and payroll, 80 for yield. But do you differentiate between csUSDL and maybe just USDL, like a pure kind of US Treasury yielding stablecoin that's not in a Morpho vault? I mean, would you separate kind of those risk profiles?
Yeah, I think it's a very great question, right? So yeah, I think it's totally up to the user if they want to avoid basically having, the lending yield component risk. Although it is managed by Steakhouse Financials, they are like the one of the largest asset manager in like RWA program of MakerDAO as well, right? So yeah, but it's totally, these institutions are very smart enough to evaluate the risk, right? It's end of the day, it's a Morpho risk and Steakhouse. So yeah, I think I will separate 100% because you're still taking an additional lending risk from Coinbase and ST. That is the reality, right? So end of the day, obviously you can liquidate these positions. We need to liquidate these positions from a Morpho protocol. And the liquidators, it generally like Steakhouse themselves. So if the sharp downturn is happening and if you are failed in liquidating these positions, yes, there is a risk, which is additional to the USDL. So I think it's a great question. Yeah.
A couple of questions that are forward-looking. First, you talked about, U.S. treasuries are just the beginning for tokenization. Would love to hear your thoughts on what are the next kind of low-hanging fruit for tokenized assets that you're seeing?
Yeah, I think what I'm seeing is there are there's one wave of private credit is happening. So for players like Maple or even Upshift, and these players are bringing like institutional borrowers, and they decide the fixed borrow rate, right? And end of the day, you can borrow USDC at a fixed rate. So private credit kind of underwritings are started to happen.
Mm.
So they are underwriting every other sort of institutional borrower, you can say. So private credit is one category I see, which will grow, right? And then the other immediate category is like where people are excited about stocks on chain, what they can do in DeFi if you
Mm.
can do some lending borrowing with couple of these stocks. So I think Back.fi is doing a great job now. Ondo is building their own L1 to bring all these equities and stocks like on chain. So I'm very very excited about that. And you know what is interesting is these AMMs and lending borrowing protocols or staking restaking, these are just primitives, right? Running on this decentralized world or DeFi, right? They are asset agnostic. They don't care whether you're flowing like a T-bill versus like, some volatile assets like Bitcoin, right? So yeah, I think they deserve to be here, how I want to put it. And they will see the magic of how these AMMs and all, everything is automated and so efficient for these stocks, right? And you can build the compliance on a base layer. So for example, with Ondo layer one, I think they have this permissioned set of validators for the settlement and issuance, right? So you can control it as a base layer, and then you will build derivatives on top of it as a
Mm.
permissionless system. So it has like this should be the future.
So exciting. I think it's just like such a wide open space for innovation. That's just getting started, and we're already seeing so many interesting use cases just with T-bills. So yeah,
Yeah.
agree that what's coming should be super interesting. And speaking of what's coming, what are the next kind of big milestones or big steps in your roadmap at Coinshift?
Yeah, I think our first roadmap is to get to $100 million so that we start getting into the actual, treasuries, right, of our clients. So I think that is our first milestone so that they get more confidence. And some of the clients have already invested, just to be more honest on that side. So we are pretty confident we'll get there. Then in getting into other stablecoin reserves.
Mm.
So it is very important for us to have this, long-term capital flowing into csUSDL. So right now, if you see like Reserve Protocol or Reservoir Protocol, they hold Steak USDC, which is like a Steak House USDC vault token in their reserves, right? And we feel like, csUSDL has a very similar strategy there. So we can be as a collateral in other stablecoin protocols as well. And that will also grow. And then the other milestone is actually bringing traditional capital on chain with us and by directly working with family offices, etc. And then we are doing a lot of work there to really get them comfortable on chain and get like a new capital, because there is no reason to use these instruments in a banking infrastructure directly. So for end user, it just make more sense to use it on Ethereum. So yeah, and we
Very
will
cool.
manage under the hood for them. Yeah.
Yeah, I think that will be really exciting when there's obviously you have all this money already on chain from DAOs and Web3 projects, and yeah, there's so much that you can do with tokenization and stablecoins and all of this. But yeah, I think we still have yet to see a big kind of migration of traditional finance or just non Web3 companies bringing their treasuries on chain and managing their treasuries on chain, which I think will be a slow process, but it does make a lot of sense for them to start experimenting.
Exactly. And then just one additional point is, right?
Mhm.
So some of the family offices we talk to, actually what happens is like all these instruments like T-bills, it's available for them in fiat, right? So they're not excited about only just, we are giving like 4% if you
Mm.
practically see, right?
Mm.
So what would be interesting is like what you can do more in DeFi, which is not possible in traditional finance. And they take it as a risk, right? It's an additional risk for them. So holding a T-bill for a very large TradFi institution who have like all the access in the world, right? They will feel crypto risky for some time, right? And that this transition, we want to make sure they do it very smoothly and they feel, okay, it's additional yield, it is more secure and it is more efficient, right? So, and that is like a long conversation sometimes you need to have, but it is very interesting because some of these like teammates of these family offices are now understanding like how because they're also competing, they're also
Hmm.
competing in their own world, and that is where we can utilize our expertise in bringing them first, and then they will come because their peers are coming.
Definitely a space to watch. Okay, and then to wrap up, for those who want to start earning yield with csUSDL, where should they go or what should they do?
Yeah, so the easiest way, we have solved all the difficulties now. So you can go to CoSwap, and very easily from any token you can have csUSDL in like 1 or 2 clicks, very simply. So yeah, otherwise you can go to Coinshift.global. You will know like other campaigns are going on, right? So you can know more about the project. But yeah, it's very easy to acquire and redeem csUSDL.
Amazing. Awesome, Tarun. Thank you so much for taking the time. It's been great and super excited to hear about what you're building.
Thank you. Thanks for having me.